Hey everybody, it's Bill Stewart here with Bill Stewart Homes at RE/MAX Moves. We are continuing our discussion about market breakdown and really getting into now pricing segments specifically. The big thing is like understanding. Last week we kind of broke down all of our what I consider price blocks within the market. Your entry level, kind of second level. Luxury level and ultra luxury levels, and really understanding how those are performing, watching how equity is moving, or at least where buyers are migrating to. You're seeing this organic move from lower price, within the under $400,000 segment. You're seeing kind of a migration of the units that are being sold moving into the higher price points. But yet at the same point, understanding that first-time home buyers, there are a lot of people that are caught in where the starter home side, that's really kind of without the starter homes. You buy a starter home 5 years from now, you want to sell it to upgrade into another home. If you don't have a buyer segment for that, they can't afford it, they can't do anything, then it kind of has a tendency to want to be almost seize the market. So I find that the under 400,000 is so important to really kind of understand and see what's happening, where's it going, and then at that point, what do we foresee being challenges, moving ahead. Within this, especially with interest rates being where they are. So, really wanted to take a look at just a couple of different, really breaking down this 400 and under, similar to what we did last week, where it's just let's just take a look at it, both in total as well as then breaking it down into, say, $100,000 segments, just to kind of get a better picture as to what's happened from 2019 all the way till today. But first, really, I want to start with taking a look at what's happening right now. So this is 2025. Currently in the up to 100,000, we've got 25 listings, 25 active listings. We've got 91 sold. You're seeing an average price point right around 67,000. Average days on market being 48. This is a pretty active market. You got less than 2 months worth of inventory, which is interesting in that, days on market are, I would say, they're not high, but it's higher. When you've got such basically a very active pool, it's interesting to see that days on market, we're not falling back into that 22 days, 23 days, 24. So it's still that buyers are, evaluating properties a little bit more. And it's still taking almost, roughly right around 50 days to sell. When we take a look at pendings, contingents, you got 10 pendings and 3 contingents. Again, this is a price point where, we're starting to move into more like investor level. These could be, complete teardowns. These could be purchase to fix and flip. There's a lot of things that fall into this pool. I would say, you see that there's a small inventory out here for what is interested to buy. But that the reality is there's just a lot of these homes have been gobbled up over the last few years. So they're not as plentiful as they were at one point. When we're taking a look at 100 to 200,000, we have 149 active listings. We've sold 479 homes this year within this price category. Average price point almost 170,000. Still sitting under 2 months worth of inventory. Average days on market a little bit lower. At 42. Out of all the pricing segments, this is the one that's 42. This is the one that's moving the quickest. Pendings and contingents, we've got 43 and 55 respectively. As we move into the $200,000 to $300,000 range, you start to see now you've got a lot more inventory. 926 listings, active listings. We've sold 2,258 people. There's been 2,258 properties that have sold this year in this price point. Average price point right around 265,000. Average days on market though, you're seeing going from 48, 42, now up to 57. So, obviously it's taking longer than the other 2 price points below it because we're moving up a little bit higher. But there is, there's a pretty decent number of active listings that are there for buyers too, so they can evaluate, right? They can evaluate a little bit longer. They're not in any rush. So unless they see something where it's priced really, really well. Some of the, the average is going to be 57 days. You've still got 257 pending and 250 contingent. So this is still moving pretty quickly. Like, in terms of, their average over the 6 months, let's call it 400 properties that are selling on a monthly basis, over the last 6 months. And at that point, like, you've got 257, over 500 right now that are either pending or contingent. So they're in contract, they're actively ready to buy. That at that point, that seems to be pretty consistent with what the performance has been for the year. 300 to 400,000 active, 367 like active listings right now. We've had 2,229 that have sold. Average price point 345. Days on market here is a little bit less, which is interesting. You've got a little over, just under 4 months worth of supply, and you've still got 268 pending and 345 contingent, which based off of that's what, almost let's call it 600, right? 600 that are under contract, still coming along. They may close July, they may close August. It really all depends on like what's going on, but I would say pretty healthy activity that's happening that hasn't closed yet, that says that we're probably going to drive this number up a little bit towards the, as we move into the end of summer. But total being sold 5,050. Average price point across the entire 400 and under is 286. Average days on market is 52. And, we've got like just under 3 months worth of supply across all pricing categories. With basically 578 pending and contingent. So I would say the market this is a good moving market overall, and there are still listings out there that can be going that are making it where buyers have got options. But it's a little bit tighter in this market than say the 400 to 800 as far as like your actual inventory and month supply. What I really wanted to take a look at now was just taking a look at how many total units have sold since 2019, and each one of these pricing like blocks within the block, where we see, back in 2019, 644 units sold in the 100,000 and under. So far last year, we sold 177. So far this year, we're at 91. If we multiply that by 2, basically 6 months, we're only 6 months of the year. We got another 6 months to go. Let's say it's 180, still significantly lower than where we were in 2019. So obviously the market has moved, and that some of these properties have now moved into this $100,000 to $200,000 price point, which in 2019, we sold 4,649. In last year, we sold 1,027. So like less than 25% of what we had done in 2019 in the price category. And we're trending this year, let's call it 1,000 units within that. So we're settling into par, pretty close to par for last year, but we're still down significantly in this price point in the terms of the number of units that have sold here, compared to 2019. Looking at 2019 for 200 to 300,000, we sold 4,700 units in this price. We saw a bit of an increase 2020, 2021. We fell back down to 4,100, call it 4,200, 4,100 in 2023. Then we were back up to almost 4,500, and we're trending right now to probably get close to that 4,500 mark again. So a little bit down from 2019, but in general, compared to the other two price points below it, it seems like just the idea of what inventory is selling for and the overall price that can be commanded. Some of that stuff is kind of moving more towards the 200,000 to 300,000 range. Looking at 300 to 400,000, we did 1,701 units sold in 2019. So there wasn't really a huge amount. There wasn't a lot of units available, or the idea that like there was just not a lot of buyers for this pricing category. But then we've seen this kind of move up over time. Our biggest jump was in 2021, where we jumped almost 1,200 units compared to 2020. We jumped a little bit higher in 2022. 2023, we got to 3,700. Then just a little over 4,000, almost 4,100 last year. and we're trending 2232 is what we've actually sold. So let's call it, you know, if in essence like 4,500 or 4,400 that are going to sell somewhere in this price category last year or this year, that, you know, it's interesting to see this in that this being the price where it is and understanding who's being the most affected, that it's very interesting to watch that this pricing segment has seen an impact in the total number of units sold, even with interest rates being as high as they've been and all of the inventory issues and things like that, that at that point we're just seeing an increase in the total units sold is pretty interesting. Whereas in the other pricing segments, we've seen that there was, you know, they were impacted, whether it was just lack of units or the idea that it was really like buyer affordability. But it's interesting that we saw more going in there. So average price points in these categories started at 68,000 in 2019 for under 100. We're at 66, 67,000. So not a huge difference, but we've definitely seen a drop off, but it's held relatively stable. 100 to 200,000, we've got 162,000 versus 169. So, you know, we're up what, you know, they call that it's up, but it's not necessarily, we're not talking a huge jump between there. But again, maybe it could be just the fact that there's not as many of these homes available. The other is like in this price segment, I would say there would be other things that would make this up, but from an existing single family home perspective or single family homes in general, you know, it's holding relatively stable. 245 in the 200 to 300,000 range. You know, we've seen in this category somewhere between an 8 to 10% increase. Let's call it 10%, you know, over from 2019 up through this year. You know, we're not up significantly higher than last year, but we are seeing that it is steadily increasing over time. Like we've seen really kind of not really any big, huge, gigantic bumps, but that it's, you know, 20, I guess here and there, but really 2022 is where we saw it. But, you know, 2022 is when we started to see the interest rates creep up. So it's interesting to me to see that 300 to 400,000. This has remained almost as steady as it can be. 344 in 2019. We're at 345, and you're not seeing that this has had any dramatic, like there's no dramatic wobble within this price point. So, which is, you know, interesting to me considering where we are. And then when we take a look at the number of units that have sold in here, you know, you're seeing more units selling in the 200 to 400 price point area. And that at that point, even though there seems demand has shifted, or at least buyers have shifted into these price categories, you know, the idea of having that the supply levels been where they've been, you know, I could see there being some sort of like hold period. But it's interesting when there was really no, I would have expected that these would have been a little bit higher in terms of the actual average for the years where the market was crazy, but it's not. So when we take a look at list to sell percentage, starting at 92, we're down to 84. You know, this is an interesting scenario. There's been a lot of things that have happened economically. This is also kind of your investor, like I said, renovators, maybe they have to do a full, you know, demolition, a rebuild. You know, the cost, like we saw inflation jump up. We, you know, the supply chain itself had some challenges over, you know, over the period between 2019 and now. And material costs, labor costs, all those things have come up. So I'm not really surprised to see that the list price to sell price has dropped a little bit, just because of the fact that those investors are, you know, they're more price sensitive. You know, 20 grand difference in that price point is the maker or breaker, whether the project could go forward or whether it can't, whether they can break even. So this is a pretty sensitive, and I would say this is where a lot of negotiation is happening, even though there's not a lot of inventory and that your overall days on market in here is less than 2 months. So I think it's interesting to see that, that, you know, it's selling quickly, but that this would be what I would consider a buyer market with a seller, like a seller inventory level. And their overall days on market are still 48. So not too much higher or lower than any of the other price categories. So anyway, 100 to 200,000, we started at 98%. We're at 96%. So a little bit of a wobble, but last year we were at 94% and it's coming back up to 96% as of this year so far. 200 to 300, we started at 98%. We saw times where it was over 100% and we're back down to 98%. And then 300 to 400, we started at 98%. Similar track record to the 200 to 300,000 price point, but now we're back to 99%. So still getting pretty close to your list price on there on the house. But the idea is that you still have to price strategically in order to be able to capture that list to sell price ratio. Because if you're priced too high, you're just not gonna sell. Average days on market, we saw 40 in the up to 100. We're at 48 now, so a little bit of a change. 100 to 200, we started at 38. Now we're at 42, so it's up a little bit, but in general, it's not. We're seeing it increase slightly, over the last couple of years. But in general, like I would say, it's within a pretty comfortable variance. 200 to 300, we started at 57. We're back to 57. 300 to 400, we started at 69 in 2019, and we're down to 50. So, I would say in general, like we're kind of stabilized. We're coming back to more of a normalized market. But even though you only have, so many listings and so many months supply, homes are still sitting a little bit longer because the buyers, there are probably less buyers in this market overall. So things are they're having a tendency to sit a little bit longer, unless they are priced well and condition looks good. Those houses are going super quick, but there are some houses that are on the market for 200, 250, 300 days. So that drags it down too. So, when you're looking at well-priced homes, sell real quick and can still get multiple offers. So one of the things that, we talk about all the time, so, that just kind of gives a lay of the land as to where we are. Obviously, we know this is probably going to be one of the most impacted when it comes down to interest rates, when it comes down to, price, there's a huge price sensitivity because of the fact that these are, this is going to be, it's having a bigger impact on who the buyer is in the pool of homes like this. So, when you're looking at, pricing strategically and making sure that you're standing out above the crowd. I mean, don't forget, you're still sitting at almost what is it, 2,400 listings that, are in these price categories that, you're going to be competing with no matter what. I mean, there's a lot out there. And when you've sold 5,000, so let's call it like 900 homes per month, and you've still got, almost 3 months worth of inventory sitting out there. The idea is that buyers have a lot of choices. For those buyers that are interested in looking at homes right now, it's a still active, it's a I would say competitive market, but that you have a lot of kind of choice to look at, as well as there is going to be sitting at 50 days on average in market. Sellers are going to could potentially be willing to negotiate a little bit more in with a buyer who's interested in the house. But, so it's still a seller's market, but it's one of those, like, it's kind of a weird, like, it's a seller's market if you're priced well. And then at that point, like, you're holding the leverage. Buyers still have choices and opportunities to be able to get there. The average price point in this category being at $286,000 or just under $300,000. I think there's still a wide variety of options to choose from. But one of the things that we talk about a lot, and I was just having this conversation with a client that we're about to list their house, new construction. I mean, one of the things that was brought up was, I think there's too much new construction. There's this, we're going to be competing with this. This is the reason why it's not selling. Well, depending on where you are, that's absolutely true, right? If you are in a neighborhood where you just bought the house within 2 years, but the neighborhood hasn't built out yet, and there's brand new inventory availability out there, then at that point, like, it could be difficult to sell for what you're looking for in order to break even. Say you bought the house at $220,000, to sell it, even though if the new homes are going for 240,000, you can't price yourself in that 240,000. Because why would I choose your house if I can go get a brand new one with all the incentives, full warranty and everything else like that? So you've got to be pretty strategic in terms of where it is. But knowing that I talk to people all the time, it's new construction, why it's not selling. We're competing with new construction. We're doing this, we're doing that. And for me, I think that there's areas where that is true. I think a lot of times that's more often than not that I see is it's that we are misinterpreting the market. And so at that point, it's an easy out. Blame it on the kitchen. New construction is definitely it's holding us back versus like homes will sell if they are priced well, if it makes sense for both the seller and at that point, like finding a buyer that is willing to meet them at that price. But could it be challenging? 100%. So one of the things that I wanted to look at was like, let's take a look at how was the new inventory market affected? How many new homes did we sell back in 2019? What was that mix? What percentage of new homes made up the market? How are we looking over time? And then I want to take a look at specifically midpoints or average price points in each one of these categories, because this can also have an effect. Again, when we talk about what we are looking at, the average home sale price being $286,000 in the up to $400,000 range, right? So when you're pulling your comps, you're taking a look at everything and you're generating your price per square foot, and you come up with an average of $286,000. Well, is that going to be a good price, a bad price? And I think that dissecting like basically separating these two between new construction and existing homes, that it's two very different markets. Now, that doesn't mean that every buyer wants to buy new construction, or that existing homes can't compete up against new construction. That's absolutely not true. It's just the idea that the two markets are very different. And so at that point, having that general awareness when you go to try to figure out what is going to be your strategy if you have to sell, or if you're looking at homes, understanding that one might carry a little bit more than the other. But so I pulled this right here, which I thought was pretty interesting. Looking at the number of new construction units that were sold in 2019 compared to what we sold in last year. And then that we are so far this year, we've sold 1,907 new construction units. So we're tending to be somewhere between say 37 to 4,000 units in this new construction, like segment. Average price point in 2019, 243, roughly 244,000. This year so far, we're up to 309,000. So we've seen about a $65,000 jump, $66,000 jump in this price point, or in this segment up to 400,000. So it's been a pretty healthy market. You're seeing about a $10,000 increase each year over the last 6 years. There really hasn't been any areas where it jumped significantly, with the exception of 2020 and 2021. A lot of that was because of the fact that there was really no inventory. Sellers couldn't find anything. Builders couldn't build fast enough. So we basically at that point kind of went and gobbled up. And then inventory levels have, started to come out a little bit more. Builders like really started cranking out homes. But it was still where there was not a huge amount there wasn't a huge amount of inventory in this market when you're talking, 22% of it, 23% of it, but what I do find interesting is that we're starting to see a pretty big uptick, where we were hovering around 23% of the market was new construction homes. In 2023, we saw that jump to 31%. We saw it jump to 36% last year. And this year we're trending to be at 37.6, 38%. So there, obviously the inventory levels, builders are offering more, and with new construction, there's different incentives, right? So the idea that they can offer things like interest rate buy downs. They can do closing cost incentives. I'll give you 20 grand if you close your house. that the idea that they're able to do updates, upgrades, buyers have opportunity to be able to kind of have some, have a little bit more influence and I guess they can make their suggestions more within new construction to make that home their own without having to do any work. They're already paying for it. That they're getting a new home warranty. They're getting brand new appliances. They're getting a brand new roof. They're getting all these different things. So they're willing to pay a little bit more for it because of the fact that some of that risk has been mitigated. But that doesn't mean that in the existing home market that we've seen this crash. In fact, we are seeing that we went in this segment specifically, we're seeing that units overall are, we're seeing an increase, and then there was a slight decrease. Then we're back up in the new construction market. Some of that's just because of the fact that they've had more inventory. We are seeing that, we've come down a little bit in the existing home market. Some of that is because of the fact that there's only so many buyers and where they're going. But the other is also too, some of these homes have appreciated that are no longer in the $400,000 price point. They've moved into the $400,001, $425, $430 market. So it's not that it's just that we're seeing the shift in appreciation across the board. Because you can see, even in the existing home market, we started at 209,000. We've come up roughly 63,000. So both the new homes and the average, the existing home prices have kind of moved up in the same at the same amount, or I would say percentage wise, you're seeing a little bit higher percentage jump in the existing home sale price, but. And that, 37%, almost 38% of the market is new home construction, but still, heavily dominated by the existing home market. So, there's buyers that like new construction and some that don't. It really comes down, and we can get into more detail about new home construction, because I think this is it's an important topic to talk about in regards to what to look for, questions to ask, understanding the incentives. Not all incentives are created equal. The idea of interest rate buy downs, the pros and cons to all of those different things, as well as which builders are what are builders offering, which ones are offering the most. Do you have flexibility in the lender? Do you have flexibility in any of the terms of where it is? And then the other is just understanding your role when you walk into a new home sales department and talk with somebody. That at the end of it, the importance of having an agent or having agency with someone to kind of make sure that somebody's there to make sure that the things that they're telling you, they're actually following through with, and what that relationship looks like when you're either represented or not represented. So I want to get into that too. But the main thing that I wanted to say too here is when we're looking at this price, right? And we're talking about I think this is sometimes a major, a big deal. When we come back to where we said in this price point, the average price point was 286,000, right? If I start breaking that down by square footage, or I'm looking at, across the board, trying to figure out my math and as to how much is my home going to be worth. I think this is also too where when you look at estimation tools, this is where the errors occur as well. Okay. 286,000 is the average. If you're selling a new home, then at that point you would be under if you priced yourself comparably, you would be under that average. And if you tried to price yourself and think to yourself that my home's worth, $290,000 when really you're probably in the 270 to 275 range, this could be a big miscommunication. And sometimes a big mistake that I see happen a lot, I should say, in that we're misunderstanding or misinterpreting what the market is telling us and what the actual numbers are telling us. It's not that you're not going to sell the house, but that understanding where you actually sit in your price bracket, who you're competing with, and all of those things, I think go. But this is a pretty significant thing, breaking this apart and then taking a look at your average price point to understand that even though you've seen a pretty big increase in overall equity in the existing home market, that the new homes are definitely, like, new homes are selling at a higher price point, which is not necessarily mean that your property is going to follow suit. So again, this is a very high level. We're only looking at single family homes. I'm not breaking this down to townhomes or anything else like that. This is the single family home is the largest segment in the market, and it's just easier to kind of like go through. But if there's anything that you see or anything that you're curious to know, you want us to do a deeper dive on it, or if you have questions, feel free to reach out to us. Either put a comment in the comment section. Our phone number, our contact information is all in the description. Feel free to reach out to us. And if there's a topic that you're interested in that you'd like us to take a look at, I'd be more than happy to kind of like break into that. And if you find any value out of this content, please subscribe. We'd love to engage. We try to do this on a weekly basis and just really trying to educate and have better understanding. Because honestly, it's just as much for me as it is for anybody else. The more you kind of learn by doing, the more that we can break into this and have an understanding, the better that our team is at helping our clients. But really, the main goal is to make sure that we're kind of demything some of the things that are out there. I mean, I think the biggest thing for me out of this video that, when we take a look at really comes down to the new construction, taking a look at new construction. I knew new construction had become popular, but I was not really aware as to how much it has jumped over the last couple years, as far as like how that's diluting the market, especially in this price point. I think it would be interesting as we go into different price points, how the new construction to existing home units, are we seeing more of this in this under 400 market, and we're seeing less in the others, and more, we're seeing a depletion. I think it'll be interesting to see what that has to look at. So stay tuned. But listen, have a great week. It's almost 4th of July. Please have a safe weekend, safe holiday, and we'll talk to you soon. Thanks so much.